Snap reported fiscal year 2022 fourth quarter earnings results that disappointed investors. The stock was down as much as double digits following the earnings release. So let's take a look at the details. Let's take a look at the figures that had the market upset about Snap's results. So overall revenue increased by 12% in the fourth quarter to 4.6 billion. Snap reported a loss per share of 18 cents, which worsened from an earnings per share of 1 cent in the fourth quarter of 2021. The stock Snap crackles and pops after a disappointing Q4. This is because investors were thinking that the company was making progress in revenue expanding and profit expanding as well. It was making good progress, demonstrating economies in scale, and this was an abrupt turnaround in its prospects. Thankfully, it gained 12 million daily active users in the quarter to reach 375 million DAUs. This was up 17% year over year. That's good news. However, no gain in users from North America quarter over quarter, and these users have the highest average revenue per user. Folks from the US have the highest per capita income, and of course, marketers are willing to pay more to influence the purchasing decisions of people in North America. So when Snap doesn't add new users from this region, this is bad news for its profit and revenue prospects going forward, right? Because users from other parts of the world, they have lower disposable income, lower per capita income, and so marketers are not willing to pay as much because they don't have as much purchasing power, right? So this was a bit of bad news within the report if you went a little deeper into it. Overall, average revenue per user was down 15% to $3.47 globally. This was down across all regions. Average revenue per user was down across all regions. No spots of good news here. Um, Snap is getting impacted by several headwinds, namely Apple's privacy policy changes that make it more difficult for Snap to deliver targeted advertising. Marketers are willing to pay more if they can show precision advertisements, right? Because the chances of that viewer seeing the advertisement and making a purchase go up when they're targeting that particular user, right? If you've got a product that's geared towards males, you don't want to show advertisements to females because the likelihood of them purchasing one is significantly smaller, right? Yes, a female might purchase a product geared towards males, maybe for a gift for their significant other or maybe their father for Father's Day or something like that. But that percentage is much smaller than showing an advertisement to a male for a male geared product. Your return on investment for that advertisement is higher. So as a marketer, you're willing to pay more to show that advertisement, right? So Snap is losing that capability, or I shouldn't say losing completely, but that capability has become reduced because of the privacy policy changes made by Apple. And so this is a long-term headwind until Snap can find a workaround to alleviate this reduction in ability to show these advertisements. Okay, so they didn't make any progress in that regard in this quarter. There was no change as far as being able to find a workaround in that regard. Okay, so that was one thing. The other thing is that TikTok is gaining significant popularity among social media consumption, and that's taking away attention away from Snap. Yes, maybe they still have these 375 million daily active users, but perhaps they're not spending as much time on the platform. They might be just checking in still as a matter of habit and getting bored quicker and closing Snap's app and opening TikTok instead. And so this is another headwind. And then of course, the Russian invasion of Ukraine is causing disruption in the European advertisers, uncertain about how their region's customer demand is going to be, and so they're pulling back spending there. So these three headwinds have persisted for much of 2022, and now it looks like between what management had discussed in terms of guidance for 2023, it looks like it's going to persist well into 2023. It wasn't like it was just going to hurt them in 2022, and it's gonna remove from their financial results going forward. That's not the case. It's going to continue to hurt them even through 2023. This was again another piece of bad news. So 78 million of free cash flow in the fourth quarter was down from 161 million in the same quarter last year. So less than half of the free cash flow year over year. So significant drawdown in terms of the amount of free cash flow it's generating. Still, it's good news that it's in the positive free cash flow territory, and the company is self-sustaining now for a long time. Snap was bringing in was operating at a free cash outflow instead of free cash inflow. So this is good news. But another thing that spooked investors is management did not give any official guidance for the first quarter of 2023 or the rest of the year. Unofficially, they talked about revenue decreases in the low mid single digits for the first quarter, but officially they didn't provide any guidance. And anytime there is less transparency to investors, that increases risk, which decreases the stock price. This is true for any investment. And so when you're removing transparency, that means investors have less visibility into what's going to happen over the next quarter and the next year. And if there's less visibility, that means a greater dispersions of outcome, right? It could be plus 5%, it could be negative 5%, it could be negative 10%, it could be negative 20%. So with the increasing variability, that means that investors have to account for that in their models, and they're assigning a higher degree of risk, which means on the denominator, when they discount those cash flows, they're going to use a higher rate on the denominator, which decreases valuation. And that's another reason why you're seeing Snap stock fall after these fourth quarter results, right? It wasn't just with what happened during the quarter, but it was also the outlook, the removal of the outlook, and the increase in risk because of the removal in the outlook. All right, so if you've been following my channel, I had said in the beginning of year, do not buy Snap stock. Stay away from it. It's too expensive. And now, even after the stock falls following this quarter's earnings announcement, I would still say to stay away from Snap's stock. It's still not time to buy this stock. There's still those headwinds that I mentioned, as well as the market's unwillingness to price this company at a continued premium valuation compared to other social media companies that are selling for lower valuations like Meta, which you can buy at much less expensive valuation. So if you're looking for a social media stock, go with Meta. Meta was the one that I had recommended in the beginning of the year, and so far it's performing relatively well, and I'll have a video coming out about that shortly also. So thank you for tuning in. That's all I've got for this video, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.